Hi guys, this is Martin from Livemarkets.live. We'll first of all look at the euro dollar and we'll start with the daily time frame. Now if you look at the daily time frame, you can see how this green line, which is the 50 moving average on the daily time frame, is coming in at 1.1730. Now that's the level that's been exerting all the force on the euro dollar pair, and this is the first major test of this line after falling off the 1.2250 level. We do not see this going above for the simple reason that this trend here has been very powerfully down, and also the US dollar 2-year yield has just gone above the 2.6 mark yesterday. So the yields continue to rise in the US, and therefore we do not see this sustainably going anywhere higher. There is supply here at 1.1730, and we see a very strong rejection of this level down to 1.15, taking out the lows here. Why are we so interested in the 1.150 level? Well, those of you who track the option market will tell you that there is a barrier option that currently is at 1.15, and then there is a second barrier option at 1.1450. The last time we went to 1.15, we had a low 1.1508, and then we turned away from that level, and that was the barrier option, people buying it and trying to defend that level. Barriers are normally defended, but often they are taken out after some time. As you saw that in the US, in the dollar yen pair, there was a barrier at 111.5. and then there was a barrier at 112. Now if you had seen the price action, we saw how it rose from 109.8 to 112.5, and it all was the attraction towards a barrier at 111.5. There were stop losses at 111.5, which got taken out, and the pair got propelled higher to 112.5. We expect a similar action in euro dollar pair as well. There's a barrier at 1.15. It looks bullish at these levels at 1.17. There's always this doubt that will it go higher. Well, as I said, there are two reasons. One, the US side, the US yield is continuing to rise, and that's going to keep pulling the money, even though in the spot market you'll see there'll be some delay pulling in the retail crowd going long the euro dollar. We expect it to fall down. The second reason why the euro dollar is this time down is because of the barrier at 1.15, and because the barrier in the dollar yen was taken out, we see that to be the case with the euro dollar pair as well. So there will be some bit of movement up and down here, but generally we'll be very comfortable for it to fall down. Now this is a 5 minutes chart, and as you can see, there's this today morning there's this one final move higher that's just clearing off the stops here, and then we see a very strong fall, and we expect the fall in the euro dollar to begin today. It's been here for some time. It all started with the Friday price action, and the reason why it's continuing to stay here is just sucking in a lot of retail crowd. It pulls in a lot of confusion into the traders' mind. Oh, is it going higher or is it going lower? So there's always that doubt, and it's just waiting in this channel. So when you look at the trend analysis, always look at the daily or the weekly. That is the stronger trend. The 5 minutes don't give you any major trend. They'll give you 10-15 pips if you're not in the market to make those kind of small pips. So there we are. Euro dollar looks all good. There's a little bit of pause, and we see this falling down primarily for the reasons that we just mentioned. On the dollar index itself, we saw the 200 moving average on the 5 minutes chart broken this morning, but then there was no momentum with this, and we've come down again. We've seen this kind of movement again in the past as well. You will see that the prices will stabilize somewhere here, take the lows here, take support, and then rise sustainably higher. Today is Powell's testimony to the Congress and the state of the economy, and we expect him to be as bullish as he was last week when he said that he sleeps very well looking at the economy in the US. So the things are very healthy in the US. On the other hand, things in the European side are looking very shaky, especially in Germany. The growth was downgraded yesterday in Europe from 2.4% to 2.2%. That's not good news. But euro dollar is known to wait for some time before ultimately reflecting the reality. On the now just looking at the COT charts as well, you will see that this is the commitment of trade is this got updated last week on Friday, so it's just good to take a look at it. First of all, we look at the euro dollar, which is the one that interests us. So where Yeah, this is the hourly chart, and you can see this is the green line. May not be that visible, but what's important here is this line here, COT pair index, and it's at it is at 29.60. As you know, as this keeps falling, this is a USD Euro commercial. So as this keeps falling, Euro dollar will also keep falling. So the trend again from the positioning side on the futures market on CME is showing that Euro dollar is slated for a very strong down move. Don't get taken in by the summer move of just this is low volume moves. There isn't much interest in just wiping up a few stocks before it's going to fall. So we see this falling down. The other thing you should note here is the open interest in this blue line. It fell from 49,000 to 47. That's a 2,000 cut in open interest, and this happened when prices were going higher. So that's not good news if you're long euro dollar. That's because it means as the big boys, institutional, the big money is cutting out of these long moves. They are not interested. That's what open interest means. So if open interest had risen, then well, they are in this play, and therefore we could say that well, this could move much higher. This time around, we see that open interest fell, and therefore this price action higher is a low volume move. It's very lacking any major money behind it. It's just retail money, small money pushing it as what we call as dumb money. So that's a euro dollar looking all. It's a little bit of movement up this morning, but we are not very interested in going long at these stages, or even taking out the shots that we have. The current average price is about 1.1674. That will change. We'll be probably closing a few at 1.1660, and that will bring down a lot of positions in profit. That's a euro dollar. Well, on the USD CHF, well, it was a false breakout at one point. As you can see, this is where we went in at 1.006, and this was the reasoning behind, as you know, was the clearing of this highs here. It was a clear breakout, but as they say, 80% of the breakouts are false, and it fell down. But ultimately, we will see that this is going to go higher as well, based on the dollar. That is why we haven't closed. No point taking a loss when the general trend in the dollar is going higher. So we will see some kind of support being taken here, and then movement to take over the highs. So we're comfortable. We don't have much exposure there, but it's majorly euro dollar, and we're very comfortable with that trade. We'll be having further updates today or probably tomorrow. Traders will return. The Japanese market are back to trading this week, and we are looking for a full volume session today, later part of Europe, and then the US sessions as well. This is